Hello everyone, I'm Lindsay Dowd and I'm delighted to welcome you to our latest Link Group podcast, which we are still recording from our respective homes during the ongoing pandemic implications. For today's topic, we're going to be taking a look at the alternative investment market, otherwise known as AIM. AIM was launched in 1995, so it's actually 25 years old this year. It was launched with just 10 companies and a total market value of £82 million. And today it has 750 companies from the British Isles, together with a further 89 international firms, and has a collective market value of £97.4 billion as at the end of June this year. Its mission is to provide access to capital for fledgling companies, imposing a lighter regulatory burden than the main market, so that smaller companies can also access the benefits which come from public ownership. And here at Link, we were delighted that in Q3 of this year, we again topped the tables in the Advisors Rankings Guide as the leading provider of share registration services to the AIM listed community. So today I'm delighted to be joined by two of my colleagues, Kit Atkinson, who is Head of Capital Markets, and Jay Baker, who is Head of Industry, both at Corporate Markets at Link Group. So I wonder if I could start with you, Kit. Perhaps you could begin by giving us an overview of the impact of the unprecedented market conditions we've been seeing this year on AIM and any trends that we're seeing emerge.
Sure. I mean, it's not been quite such an auspicious 25th anniversary for AIM as many would have hoped for. There have clearly been challenges across the market, not restricted to the growth segment, but just to characterise some of the longer term trends as well. I know in your introduction you mentioned the number of companies now admitted to AIM. I think that is unfortunately significantly lower than it was at the high water mark back in 2006, prior to the financial crisis, where there were more than 1,300 companies admitted to trading on AIM. So there's been a steady decline over the last 10 to 15 years, accelerated really by the financial crisis in 2009. This year has really continued that trend with 13 IPOs to the end of August, but 45 companies being removed from AIM, either through cancellation of their admission to trading or by being acquired. So the long-term implications or the long-term trends are that there is a decrease in the number of companies admitted to trading. And to be honest, that fits with the main market really and public markets in general. I think there is a feeling that with private equity awash with cash, with increasing obligations on public companies, the public markets are presenting, in some cases, a less attractive funding alternative to the private routes that we've seen over recent years. Clearly that could change, but there are definitely some concerns out there, but just to counter that and to try and shine some sunlight on things. You mentioned the market cap of companies on AIM in your intro as well. As at the end of August, that's actually an all-time high. And that's made up of more than 20 companies worth more than £1 billion. The largest company on AIM is actually ASOS with a market cap of £5 billion. So if it were to seek a premium listing on the main market, would be a constituent of the FTSE 100. So clearly, AIM is a market for companies of all size. Really, it's not just that growth market anymore. Although clearly that's what the intention is. I think just to highlight some other positives in terms of trading, there's been a record number of trades per day throughout this year, and the volume of trades has been at a record this year. And actually, before COVID, in 2019, dividends were at a record level for AIM as well. So despite the fact that the number of companies is declining, clearly the quality of those companies is climbing. Companies are choosing in many cases to stick with AIM rather than move up to the main market. So there's definitely some positive news stories there. Now, clearly COVID will have impacted that, and the recently published AIM dividend monitor, which Link release on a quarterly basis, did highlight the impact that COVID has had. Dividends are down significantly, but having said that, AIM companies have proved more robust actually than their main market counterparts. So you've actually seen fewer AIM companies cancelling or reducing their dividends than was the case with main market companies. And the culture of paying dividends is very firmly taking hold within AIM. So back in 2012, there were 26% of AIM companies paid a dividend. In 2019, at that record high point, that reached 35% of companies. So once again, more positive news coming out of AIM. We hope that once the pandemic comes to an end, that strong growth, 18% growth trend year on year in the value of dividends being paid will resume. Although we have suggested in our most recent research that those dividends will not return to their pre-COVID levels until probably 2022 or 2023 at the earliest. So testing times, but hopefully some that we'll see the back of soon.
Thanks very much, Kit. I think just before we explore some other elements of AIM, I think it would be good just to bring in Jay. And I just wonder, Jay, do you have any observations, particularly on the dividend piece from the broader market perspective?
Yes, thank you, Lindsay. I thought that was a really good appraisal actually by Kit, and he's stolen a lot of my thunder. So not much more to add there. Interestingly, about the market cap value of AIM, we already know the top 25 companies on AIM represent about a third of that complete market capitalisation. So that's a great indicator of how good AIM is at bringing companies through this journey of growth, and I think that will continue. The dividend question is one I know that Kit has just touched on, and I hope that I would share the same optimism about dividend growth on the AIM market in the future. There has been, or certainly we're seeing, possibly as a worst case scenario, dividends dropping by up to almost 50% in value on the AIM market this year, given the current pandemic and COVID crisis. But of course, recovery will come, and we will see, I'm sure, that recovery take effect in 2021 right through 22 and 23, back to levels those peak levels we saw in 2018, 2019, hopefully being surpassed within the next few years. So whilst we navigate these waters at the moment, I think we're in a great position on AIM, at least in its 25th year anniversary, to push through and bring the companies on the journey with them through growth. AIM as a market generally is a centre of choice for many companies, given its easier structure to list, and the QCA code, for example, on compliance with good corporate governance. And I think that encourages companies to list on AIM, however small you are or however large you are. And Kit was absolutely right when talking about ASOS, and there's a couple of other companies I could mention too, that with their current market cap, they would be significant FTSE 350 or FTSE 100 market participants. So it just goes to show you the value that AIM has to give, not only to the market generally and investor confidence, but also to company directors in seeking to grow their companies. I wanted to add one more thing before we move on to other comments on AIM, and that is shareholder behaviours. Now, many people listening to podcasts, especially with me in it, will know that I'm quite passionate about shareholder engagement. On AIM, in particular, we've seen more engagement from AIM shareholders in the proxy flow than we have from the rest of the markets combined. So for registered shareholders on AIM companies, we're getting about 6%, over 6% shareholder engagement in voting, and up to 70% of voting via electronic means, which is enormous compared with our other markets right through the indices, where we're typically only seeing about 4.8% of engagement and about 50%, almost 51% of electronic engagement for proxies. So I think AIM demonstrates that those retail investors sometimes can be a lot more engaged in the AIM companies than they are in the fuller listed companies. So I think that's a great attribute that AIM should look to engage with themselves. I'll move back to you, Lindsay. As you know, I will carry on talking if I'm given half the chance.
No, that was very useful comments, actually. I mean, particularly for me, I think I've learned two things already today, which is, first off, I don't think I fully appreciated the size of some of the companies that are listed on AIM. We've mentioned ASOS twice, and also the issues around the shareholder engagement. That's also very insightful. Thank you, Jay, to know that they're certainly ahead of the game on AIM. I wonder if I could bring you back in at this point, Kit. We've touched and talked on a few of the companies and the company types that are listed on AIM. I think it would be interesting, really, just to understand, first off, some examples of recent companies, because I think I'm aware that there have been, for example, some financial partnerships who've been listing over the recent years. And also, that's the first point. And secondly, really, if you had to look at what would be a sweet spot for a company who was choosing where to list and deciding on AIM, please. Sorry, two questions there, really, in one.
No problem. So, given the current year and the paucity of IPOs, it's obviously very difficult to extract any trends from that. Over the last 12 to 15 months, there have been a limited number of IPOs, and probably the most striking group of companies that have come out of that were, as you say, the professional advisory firms. So we've seen 3 over the last 15 months or so. They were a mixture of partnerships and private firms choosing to admit their shares to trading on AIM. I think looking forward, the things that excite me really about AIM and the possibilities really are international companies. I think there are a number of US companies, in particular in the pharma and tech space, that look to AIM as essentially a first step to the public markets. So where they may be perhaps a little too small for the US markets, where they struggle to gain attention of analysts and investors, AIM presents a perfect opportunity to access a sophisticated and knowledgeable investor base in these specialist technologies. And there's a number of particularly pharma companies from the US that have chosen to list on AIM, and have then gone through their initial stages of growth on the public markets, but then look to add a US listing either on NASDAQ or the NYSE. So it is becoming a bit of an established journey for those companies, and it presents, a lot of opportunity for US companies, another option to access public markets at an earlier stage if they want to retain control of their business. So I think that's potentially one of the more exciting sectors. And the other one which strikes me is actually the UK gaming industry. So something the UK has developed a bit of a lead in is the gaming industry, and many of those companies have chosen to join the public markets through AIM. And each company clearly needs to make its own decision about where it lists and the detail they have, past earnings and things like that, to gain access to the main market. But of course, AIM presents just that slightly lower hurdle in terms of where you are in your corporate development. So I think that the great thing about AIM is that it alongside the main market, it presents options for all companies at whatever stage of development.
Thanks very much, Kit. That's really interesting and helpful to know, actually, that AIM is there not just for the fledgling companies, but also for companies of all sizes. And I think we've obviously mentioned ASOS, and there are other large companies as well, such as Boohoo and Jet2, who are also listed on AIM. So I think we'll close there. Just a few things to leave you with. We hope you found that a helpful and interesting discussion of AIM. And if you are a company that's considering listing, please don't hesitate to contact us, Kit in particular, on this issue if you have any queries. A couple of things just to flag. We have the AIM Awards coming up later in the year, November and December, and Kit is sitting on the judging panel for that. If you would like to see a copy of the Link Dividend Monitor, which we referred to, that was released earlier this month, and obviously we'd be delighted to let you have a copy of that. Thank you very much for listening. As always, we'd love to hear from you. If you do want to share your thoughts or even suggest a topic to us, you can email us at podcast@linkgroup.co.uk. We're all also on LinkedIn. So it just remains for me to say thank you all for listening, and thank you very much to our two speakers, Kit and Jay, for their contribution today.